Hello and welcome to Commodity Culture, where we break down the commodity space for both new and experienced investors. My name is Jesse Day. Before we dive in, standard disclaimer: nothing here is investment advice. Do your own due diligence. And today's episode is brought to you by moneymetals.com, the most trusted online bullion dealer and depository in the United States. Use Money Metals for purchasing, selling, or storing physical gold and silver. Hit the link in the description below to learn more and use coupon code JESSEDAY to get a $10 discount on your first purchase. Today's guest is a senior advisor to Matterhorn Asset Management AG, the co-founder of Real Vision, and the author of the Things That Make You Go newsletter. It's Grant Williams. A real honor to have you on the show.
Oh, Jesse, the honor's all mine. Great to see you. How are you?
I'm doing great, thank you. And as you are a new guest on the show, we like to start with the origin story. So take us back to when you first started investing. How did you discover investing, and how did that road lead you to where you are today?
Oh gosh. Look, as a young kid, I wanted to be a foreign exchange dealer. I didn't know what that was, but one of my dad's friends was one, and he was the coolest guy I knew. So I wanted to be that. I never quite made it in the foreign exchange dealing desk. Thank God. I probably would look even older than I do now if I'd done that. But I ended up finding my way into the Japanese equity markets back in the mid '80s, right at the beginning of the crazy bull market there. So that was where I cut my teeth, trading Japanese equities and Japanese equity warrants and convertible bonds, which were just wild. I mean, it was a crazy time. The second half of the 1980s. It took me out to spend 4 years in Japan, which I loved. I got out there just before the bubble burst, so I had kind of 3.5 years of the kind of fallout from those twin equity and real estate bubbles to deal with, which wasn't so much fun. But as a young man living abroad in Tokyo at that time was just tremendous. And the work has carried me all over the world ever since to various places. Mostly for investment banks, Credit Suisse, UBS. I spent considerable periods of time with both of those. And then latterly working for a hedge fund, Volpes Investment Management in Singapore, run by my great friend Steve Diggle. Before Real Vision came along, and I kind of stepped away to try and plow my energies into that. And after 4 years there, I stepped away from that and just went back to doing my own thing again, which is where you find me now.
Awesome. Well, I want to get your view on the main trends you're seeing when it comes to the global economy, markets, politics, and geopolitics. Obviously, that's a broad question, but we're seeing a lot of events happen, particularly in the last few years around the world: hot wars, geopolitical turmoil, political turmoil, a lot of different things, out of control government debt. You can kind of take your pick, but I'm wondering, what are the main themes and trends that you're currently watching that you think investors should be paying attention to?
Well, look, we've been headed here for some time, frankly, and as much as the stuff that we're seeing now is shocking, to see a land war in Europe is shocking. To see a resurgence of the kind of violence we're seeing in the Middle East is shocking. After such a long time where everything suggested that things were calming down in that part of the world. But at the same time, they're not shocking at all. We as I said, we've been headed this way for some considerable amount of time, and it's this link between economics, between monetary policy and social unrest are very clear, and they've held up over time. And so, whilst in the short term, people watching the period of negative interest rates, massively low cost of capital, overinvestment, a huge bubble in everything, and this constant desire to create the perfect amount of inflation, everybody with a sense of history understood where that was going. It was going to lead right where we are now with spiraling inflation, and the societal problems that inevitably and always causes. So, in terms of trends, I think the big trend for me is kind of a creeping realization amongst a lot of people that what we're seeing is not necessarily a complete shock, that it was kind of preordained, and also it's something that we have to live with and learn to live with and deal with. And lastly, it's going to go on for some considerable amount of time. My friend Neil Howe, who wrote The Fourth Turning, has just published a terrific follow-up to that book called The Fourth Turning is Here. I would recommend everybody read both of those books. But Neil and Bill Strauss's work about generational cycles suggests that this cycle we're in, this fourth turning we're in, which is a period of crisis, is going to run till roughly 2030. So that means we've got maybe another 7 years left of this situation, and it's going to get worse before it gets better. So people have to understand that and adjust the way they think about investing, the way they think about risk accordingly. And it's going to be a big and very material adjustment for a lot of people.
And I'm wondering your thoughts on energy specifically here, because we are seeing quite a bifurcation when it comes to the globe in general, but when it comes to energy supplies as well. In this trend of deglobalization, we're seeing OPEC Plus announcing that they're going to extend production cuts into next year. Obviously, you have the risk of the Israel-Hamas conflict spreading and becoming, drawing in other players such as Iran and the US, etc. Lindsey Graham was talking about bombing Iranian oil refineries not so long ago. What are your thoughts overall on the energy space? And also, do you think we're going to see rising energy costs up ahead? And could that play a role in terms of inflation?
Look, on the one hand, you've got this idea that there's going to be a global recession. And historically, that would generally be very negative for energy prices. But we're in this really kind of strange period where the anecdotal evidence is all dreadful. The data coming out is all wildly positive, and it's kind of encouraging the soft landing and even the low landing crowd to believe that there's not going to be a landing. I don't ascribe to that point of view at all. I think there will be a landing. It's more likely to be a hard landing than anything else. But that would suggest that there is a good case to make for lower energy prices if the world goes into recession. But it's very important to understand that energy and in general, and oil in particular, has become weaponized now, and there are very good reasons for that. Your point about OPEC Plus and production cuts is absolutely true. We've obviously lost Russian oil for the most part. I mean, people are still buying it, but we've lost it from the open market. So there are constraints on supply. We're seeing kind of the downside of the green energy transition. We're seeing that people are starting to come to terms with the fact that you can't have a green energy transition without fossil fuels. It's impossible. And that kind of penny is starting to drop. But mostly for me, the really important thing here is the fact that for the first time, and I've spoken about this recently elsewhere, but for the first time, certainly in my lifetime, America isn't weak, but it's vulnerable. And I think that vulnerability is problematic because the kind of Achilles heel for America is its indebtedness, is its currency. And whilst the dollar is very, very strong at the moment, the fiscal situation of the United States is very, very weak at the moment, and that is going to matter at some point. And there are countries all across the Middle East and heading eastwards from there who have been kind of forced to bend the knee to the US for a couple of generations now. And they're finally in a position where they can say no mas and they can push back. But we've seen this already. We've seen this with these production cuts you talked about. We've seen this in a reluctance to kind of play ball and help get energy down. We've seen the US do things like drain their strategic petroleum reserve, which for purely political ends, which is an incredibly foolhardy thing to do. And we've seen an unwillingness on the part of oil suppliers to help them refill it. Which is not something that would have happened at any point in the last kind of 40, 50 years. We've had very clear lines drawn. We've had the Saudis very much on the US side, unequivocally so, no matter what was going on in the region, because of the petrodollar deal that was struck back in 1973. Now the Saudis are playing both sides. They realize that the key asset in the middle here is their oil supply. And so they're going to use it to their own advantage rather than use it to help the US cause. So energy prices for me are going to go higher. The only thing that will check them to some degree is the onset of a recession. That will lower demand, obviously, and that will perhaps keep energy in check. But I suspect there are going to be more conflicts. There's going to be more inflation. There are going to be more positive drivers of energy prices driving them higher than there are negative. And so I think for me, the path of least resistance is absolutely higher for energy prices, particularly oil and natural gas.
And how significant do you think the current correction in long duration treasuries is? What does it signal for the economy when we look at the TLT ETF, for example, seemingly collapsing over the last little while? And could this be a buying opportunity for contrarians, or is it a time to exercise caution?
Look, I think how significant is it? It's incredibly significant. You know, we're seeing things happen in the bond markets that we haven't seen happen in 50 years. So whichever way you look at it, that's incredibly significant. There are a lot of people trying to catch falling knives in the bond market. And, generally speaking, when you see that happening, it means we're nowhere near a bottom yet. The bottoms happen when nobody wants to buy treasuries at the moment. Everybody who can fog a mirror is suggesting it's time to nibble at treasury longs, and they might be right in the short term. But again, I think you have to take a step back from the market action and stop focusing on the price and look at the chart of treasuries or TLT, whichever one you want to look at, and look at the backdrop. The backdrop is massive budget deficits for the US as far as the eye can see, deteriorating fiscal situation, and predictions from the Congressional Budget Office that suggest this is going to last again for the rest of this decade. And so, it's very easy to say, is there a trade here to buy bonds? And I would think there absolutely is. But we've just come off a 40-year trending bond market. And I suggest quite strongly that the market is going to trend the other way. And that's not going to go the other way for 40 years because realistically it can't. The world cannot sustain 40 years of rising rates. It's liable to trend in the other direction in a fairly short and sharp way because ultimately they'll have to do something to get inflation under control. So there will be trading opportunities and tactical opportunities to be long bonds right now. But for me, I'm not a trader. I don't like to try and make short-term swing trades in things like this. I'd much rather ride the trend. And for me, the trend is higher for longer. Whilst the Fed have paused, I don't rule out them coming back and being forced to raise again. The GDP number last week was hardly helpful to them if they want to stay where they are and maybe cut rates. So whilst I understand there's a lot of pressure to cut rates, I think they're very serious about getting inflation under control because inflation is a very big problem for not just central banks, but for governments who are about to enter an election cycle. So I think there is a trading opportunity here, but you have to be nimble and you have to realize it for what it is. You have to keep your stops tight and you have to be prepared to be stopped out. I think the more sensible trade is to bet on higher rates for longer and position accordingly.
I'd like to go back to something you mentioned when you were discussing energy, and that was the green energy transition and how people are starting to wake up to the fact that a lot of fossil fuels are needed to make that happen. I'm wondering what your overall thoughts are on this concept of the new green economy that we're being sold by political elites who don't seem to fully understand the science behind it, nor the incredible amount of minerals needed to successfully execute it. Do you think that there's systemic issues in this whole idea of the new green economy being presented? And do you think that people are starting to realize that we've seen signs, wind energy in particular, Siemens energy stock collapsing again? It's just so expensive to bring online. What are your thoughts there?
Yeah, the Siemens news was equal parts shocking and completely predictable. It shocked the market, but I think anybody paying close attention understood the problems they were having before those numbers. And look, this idea of a green energy transition, what a fantastic idea! What an idea we can all get behind. Wouldn't it be wonderful to have completely green energy? I mean, I can't imagine there's anybody in the world that would not be in favour of that. The problem doesn't come with the idea of trying to convert the world to green energy. The problem comes with mandating it be done in a certain time period without any thought for the practicalities of the situation. We unfortunately live in this kind of world where politicians are desperate to make sound bites and they understand the power those sound bites have, and they understand that by getting those sound bites out there, they can generate tremendous support very easily. And so a very simple way of doing that has to have been making great promises about the green future, and pulling dates out of your backside, like, we're going to be zero emissions by 2030 without any coherent plan of how to do that and without any cogent understanding that it's absolutely impossible for you to do that. And so, of course, we're starting to see them being forced to walk these things back, and they're standing with egg all over their faces. The simple truth is this: there is a path towards green energy. It's a much slower path than politicians would like. It's a much slower path than everybody would like. But my friend Doomberg has this great phrase that he coined in the battle between physics and platitudes. Physics is undefeated, and that's where we are. This is a physics question. It's not a question of how you'd like the energy debate to end. It's the world as we wish it to be rather than the world as it is, and we have to deal with the world as it is. So that's not going to change. The drive will continue for green energy, and at some point in the future we'll get there. But it's going to be a long way further off, absent some kind of breakthrough in cold fusion or something, or absent the very obvious way to accelerate the green transition, which would be a resurgence of nuclear. But for reasons that we all understand, people are unnecessarily frightened of nuclear energy. And even though they're being forced to walk back plans to, shut down nuclear power plants in various countries around the world, and whilst there are dozens, scores of nuclear power plants under construction in kind of the eastern half of the world, the politicians in the West refuse to simply admit the practicalities of nuclear energy, make it arguably the greenest fuel that we have. And the fact that disposing of the waste, which is something that people freak out about, is not as problematic as the kind of alarmists would have everybody believe it to be. But there's no pragmatism. There's no willingness to sit down and say, okay, what are the constraints and what are our preferences? We all know what the preferences are, but what are the constraints? And the constraints are very, very clear. And if you are forced by the constraints to act in a certain way, then if that is in direct conflict with what you've said you're going to do, you've got a political problem. And there are political problems all over the world with leaders who've made green energy promises. So, we will get there, but it's going to be a much, much slower, much longer road than we've been promised and people have been led to believe. And people are starting to get antsy about it. And I completely understand why.
And do you think, you mentioned nuclear energy there? I definitely have to pull on that thread because a lot of people who watch this show are into uranium. What are your thoughts on the future of nuclear energy? You mentioned there was still some hesitation in the West. China obviously moving full steam ahead, massive amount of reactor buildouts, UAE, India. I mean, the list kind of goes on. What are your thoughts on the future of nuclear energy? And do you also have any thoughts on uranium as an investment at this point in time?
Uranium's had a hell of a run, and again, trading commodities is not something in and out that I do. So I'm the last person to ask for a short-term trading perspective on uranium. What I will say though is that one of the big problems the West has now, which they're going to be forced to deal with, is how do we find a way to reverse what we've said about nuclear and to come up with a narrative that we can sell to people and help them get behind nuclear, because nuclear answers an awful lot of the problems we're facing. My friend Josh Wolf suggests something simple like rebranding it as elemental energy, which, you can kind of smile at, but it's these kind of things that are needed to change the public perception of nuclear. After all the years of fear mongering about the dangers of nuclear and all the alarmist stuff that comes out whenever we have something like Fukushima, for example, which is obviously still very, very fresh in everybody's memories. It sets that back, but there needs to be a way to kind of couch and rebrand nuclear, if you like, in an acceptable way. And I don't think these countries are going to have a choice but to move back towards nuclear, because the constraints of fossil fuels are going to become much harder over the next 10 years, I suspect, and they will be screaming for an alternative, and it's sitting right there staring them in the face. Now, once you go down that road, you realize that the sourcing of uranium can be another political problem, given where most of it's located in the world. That's not necessarily going to be a problem for everybody, but it's going to be a problem for a lot of countries. But still, nuclear is green. It's much safer than it ever has been. Um, there are dangers of oil, right? The danger we've all seen the pictures of tankers running aground and oil leaks, and et cetera, et cetera. It's not as though oil is completely safe, but nuclear is certainly as safe as it's ever been. And so the problem for me is a political one. How do we make nuclear great again? How do we get those caps out, everybody wearing them, and get people to buy into nuclear energy? It's not going to be as difficult as you think, because once you get that ball rolling, people very easily fall in behind a cause. If it's got a catchy slogan and there are enough people out in the streets and you get enough actors out telling them how great nuclear is, it won't be that difficult. And I suspect that if the plans for that aren't on the drawing board already, it won't be long before they are.
Yeah, we're already seeing people like Bono from U2. We saw Oliver Stone with his film Nuclear Now. So things are definitely moving in that direction. I'd like to get your view on gold here. Obviously, yesterday we touched the $2,000 level. Uh, but I want to ask, do you think it's important for people to have exposure to physical gold in their possession, not as an investment, but as an insurance policy? And what are both the main tailwinds and headwinds you currently see for gold?
Yeah, look, I do. I'm on the record for a long time. I've been a huge bull of gold for 2 decades now. Not as a trade at all. It's not something I trade myself. I own gold. I don't trade it, and I continue to accumulate it because I think it's the solution to an awful lot of problems. And look, people get fixated with the $2,000 level, and they get fixated with, is it going to go to 2,500 or 5,000? As soon as you start thinking of something like gold in those terms, it changes the way you view it. And to me, it's never been an asset whose price is that important. What's important for me personally with gold is what it protects me against and what it preserves, which is my purchasing power. And that's really all I'm interested in. I'm interested in having something that if I put away enough gold to buy, I don't know, a small house today, if that house doubles in price, I'm interested in my gold still being able to buy that house for me if I need it. And over time, gold does a phenomenal job of doing that. I think there will be a spike in the price when it dawns on a lot more people that they too need to have some physical metal as protection against currency debasement. So I think you will get a sharp appreciation in price. But again, that's not. I won't be selling my gold because the price goes up. I'll be exchanging my gold at some point for something that I want to own more when I think that gold is perhaps overvalued, or it's run its course, or it offers me an opportunity to exchange it for something I want more. So I think there are an awful lot of tailwinds for gold now. Just looking at the political situation of the world, looking at what's going on in the Middle East, looking at the balance sheets of every single Western democracy, the corner that central banks are painted in. It's very, very difficult to find a negative data point for gold. You could talk about real rates, and this would have been the big red flag. You say, well, if real rates are going up fast, gold tends to perform very poorly, but it hasn't. It's held in there remarkably well, given the speed and the rate at which interest rates have risen. And I think now, if central banks are going to cut rates again, which they may well be forced to do, one of two things happen. Either gold goes higher because they're cutting rates again, and currencies get further debased, or inflation will return once they do cut rates, and gold should perform well in inflation. So again, if you take the price out of the equation, and I know to people that a lot of people that sounds like a foolish thing to say, and I completely understand why they feel that way. For me, right now, I want to own more gold than I wanted to own in the last probably 10 years. Probably since 2015. I wanted to own a lot of gold in 2015, but now I want to own more than I have really at any point in the last 8 years. And for me, it's not because I think it's going to 2,000, 2,500. It's because I think the damage being done elsewhere, gold is one of the only things that is going to A, protect me from that, and B, remain liquid. There's some chance that things like real estate might protect you from this a bit. But obviously, real estate is incredibly illiquid. There are people who will argue Bitcoin will do the same thing, and more power to them. I don't care about Bitcoin; it's not something that interests me in the slightest. But I understand their argument for that. It's not tried and tested like gold is, but we've seen it perform poorly in inflationary periods before. But I understand the argument, and for those people, I wish them well. But for me, right now, I'm keen to own more gold rather than less.
I wanted to get your thoughts on whether you think this era of passive investing, the 60/40 portfolio, is over or is changing, because it used to be that the widely held belief was that you just dollar cost average into an index fund, have some fixed income to offset volatility, and you kind of call it a day. And for the last decade or so, that's largely been true. So do you think we're seeing a shift there? Are those days over? And if so, how should investors change their mindset to match what's happening now?
Well, it's a great question, Jesse, and look how well that strategy has worked, as you say, right? It's worked incredibly well on just about every way you want to slice that. It's worked really, really well. But the world's changed. The world is very, very different now, and it's not just different. It's kind of upside down. We were in an era of low rates. We're now in an era of high rates. We're in an era of deflation. We're now in an era of inflation. We're in an era of free capital. We're now in an era of incredibly expensive capital. And the beauty of that in some ways is because what's reversed is the very bottom of that entire financial system, i.e. the cost of money. Everything above it is inverse. You don't have to get too cute. You realize that the things that have worked for the last, pick a date, 25, 30, 40 years, the things that have worked no longer work. And what's more, they will actively cause you losses. So you have to completely rethink your portfolio. You have to restructure your portfolio, and it has to look nothing like it's looked for the last 25 years. And that's a really difficult thing to do. And it's not something that you can say to people, oh, it's really simple, just do this, and that takes care of it. Everyone's going to have different problems to try and mitigate. But the one problem we all have in common is the cost of capital is now prohibitive for many people, for many companies that need to roll their debt over. It's prohibitive. They won't be able to do it. And so we will see an awful lot of bankruptcies. So that 60/40 portfolio that worked so well, the risk parity idea, all these things that work so well, they don't work anymore. And conditions could change. It's not out of the question that conditions could change back that way and they work again. But if you are sitting there with a portfolio that's worked for the last 10 years and suddenly hasn't worked for the last 18 months, and you are just passively thinking, well, if I hang on, that's going to come round again and everything will be good, I would suggest that is a very, very dangerous way to think. The buy the dip era is finished. It's gone. Forget it. And whilst there may be rallies, they will be counter trend rallies and should be treated accordingly, which means you sell the rips, you don't buy the dips. So, unfortunately, because this behavior has been reinforced so many times over the last, multiple decades, it's quite understandable why people feel this way and why people will say, oh gosh, I've just looked at my portfolio, I'm down 20%. I just need to hang on because the old 60/40, it'll bail me out again. I don't think that's the case. And if it does get to the point where that bails you out again, it's going to be a long way from here and you're going to suffer an awful lot of pain between now and then. So I think people need to be proactive and they need to reassess the risks they face and adjust their portfolios accordingly. And there is no one size, one solution fits all. It's going to be a very individual, very personal exercise to go through. And people should make sure nothing's off the table. The tech stocks that you own that are trading at 50 times PE, yes, they've done really, really well for you, but they're not going to do as well going forwards. And you can't have any sacred cows. You've got to put everything on the table and say, what's the purpose of this in my portfolio? My friend Tony Deaton talks about this a great deal. Everything in your portfolio needs to have a purpose. And he's absolutely right. If the purpose was for trading profits, I would suggest that unless you are a very competent, very experienced trader, this is not a trading environment. So what's the purpose of every single thing you own? And if you can't articulate a purpose for it, you shouldn't own it right now. You should sell it. Take the cash. You're getting paid 6% to sit and do nothing, and wait until you can find assets that have a purpose in your portfolio.
And you mentioned overvalued tech stocks there. And obviously, this is a show about investing in commodities. So I have to pose the question: are you seeing a shift from investing in those sorts of assets in the FANG stocks, the Magnificent Seven, um, maybe moving more towards commodities, towards real hard assets moving forward? Is that a trend that you're seeing currently emerge?
Not yet, no. And I think that's what every commodity investor is hoping for and waiting for. But it's not happening yet. I mean, it's happening at the margin. There are a lot of smart people who are doing exactly that. They're getting out of the Googles, the Alphabets, the Netflix, all the Magnificent Seven, and they are looking at commodities. We saw Chevron bid for Hess last week, so there's already starting to be some consolidation in the energy sector. That will come to the commodities sector. So, we've seen these bull markets before. We know how they work. They just haven't caught fire yet. So you're in this kind of period where uh, there's a lot of people that kind of get a sense of what's happening. They kind of realize that these tech stocks are overvalued. Everybody's kind of looking around. It's like one of these old westerns where everyone's waiting for the first guy to pull the trigger, because nobody really wants to sell them because they perform so well. And nobody really wants to go and buy commodities because, hey, commodities are dead money, and that's been the received wisdom for quite some time now. But I suspect at some point someone's going to pull their gun out and shoot. They're going to dump their tech stocks. They're going to start rotating into commodities, and when that happens, you'll start to see other people follow suit. And it's just the way these things work. But no, I don't think it's happening just yet. And that, if you're a thoughtful, patient investor, is great news because you've still got time to position yourself in the right commodities, the right stocks, and be there already when other people show up looking to buy.
And in this scenario of a shift towards commodities, what do you think are the main sectors that stand to benefit there? Obviously, you've discussed gold already. Is energy a sector that you're bullish on moving forward? And how do you feel about silver? I'd really like to know your thoughts there as well.
Yeah, no, I think precious metals are going to be a great place to put capital. I think you will get some tremendous performance in the equities, but the caveat there is you can't just go and spray money into gold and silver mining companies. It's an incredibly precise space, and you really have to know what you're doing before you go and spray money into companies. The management team is so crucial in these companies, whether it's explorers or juniors or even the seniors. You really have to know what you're doing, and there's no fever like gold fever, as they say. And what happens when you tend to get bull market in these precious metals is every spruiker in the world comes out with a story as to why you should invest in their mine, and they're incredibly persuasive. And people will get caught up in investing tens, if not hundreds of millions into projects that are run by the wrong people in the wrong jurisdictions, and they'll lose money. It always happens every time in the cycle. But I think finding people who understand that space and can invest on your behalf, the Rick Rules of the world, people who really know these companies, it's a great place to put money to work. I do like energy. I do want to be long oil and natural gas, whether it's midstream. Some of the MLPs worth looking at. There are all kinds of ways you can do this. But again, what we've tended to do over the last number of years is, let's go and buy the oil ETF. Let's go and buy, really, what's a simple way for me to be long oil? And that should work out just fine. But the real money is going to be made by the people that understand the space, do the due diligence, understand the companies. Uranium, again, long term. I'm not a short term guy. I don't look for trading swings. I think owning uranium long term is going to play well. And I think we're going to see a return to value over growth. I think it's kind of started. It's had a couple of false starts. We've seen kind of moves that way, that have kind of been aborted. But I think that's going to gain more traction. And when that gains more traction, I think you will find that commodities in general, and precious metals in particular, if you're looking for value, offer tremendous value. And so a lot of that money is going to be coming into those sectors.
Well, Grant, thank you so much for joining us today. It's been a very enlightening conversation. Before I let you go, for those who want to learn more, could you tell us about the things that make you go, newsletter? And if there's anywhere else you want to direct people online, feel free to do that as well.
You know what? Let's make it nice and easy. Grant-williams.com. Everything's on there that you could want to know about, and my Twitter handle is at ttmygh. That's about it. There's nothing really more complicated than that.
Great. Well, I'll put the links to both your Twitter and website in the description below for people who want to check that out. Thank you once again, Grant. It's been an awesome conversation.
Great pleasure, Jesse. Thanks so much for having me.
And thank you for joining us today. As a reminder, this episode is sponsored by moneymetals.com. Use coupon code JesseDay to get $10 off your first purchase. Link is in the description below, and I'll see you guys in the next episode. Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.